Hi, everyone. Good morning, good afternoon, depending upon where you are. Kevin, my stalwarts, Brock, how are you? Happy New Year, guys. Alexandra. Bruno, we're always watching the pound. We watch everything. We don't just watch, we trade it. In fact, that's a good segue, so why don't we start there? So yesterday I was talking about I'm doing okay, Hugo, Ren, Ingmar. Yesterday, the narrative I had was looking for a low in the dollar this week, a high in stock indices, and that's exactly what happened. So the jury may still be out on a few things, like maybe euro. Maybe it has a shot still for one more high here. So the jury's out. Oh, congratulations. And when you look at cable, convicted, okay, guilty. The jury has said the cable is guilty of topping. So you have a key reversal there. This is a key reversal. Check out that day compared to euro. Pretty big difference. You don't get these signals a lot. Look all the way up. You didn't have any key reversals. This was not a key reversal. This was not a key reversal. This was not a key reversal. This is a key reversal. Okay. So we were talking about it. It was up near the 1.272 fib extension, around 137, maybe it was 670 or so, 100 pips lower. So still believe in that. The next step for cable to take would be to have a Joe. What makes a key is when it's a new all-time high or all-time low, and it's also takes out the prior day's high and low outside day, closing below the previous day for a key reversal top, and the other way, Joe, for a bottom. That's what makes a key. It happens at contract highs and lows. Okay, you got it? Yeah, all right. It's Joe Perry, good guy. All right, so cable's guilty. So, you know, perhaps we get another run here. I don't think we'll top. So perhaps if the jury's still out in euro and we get another high over these 2320 levels, I'd be interested in seeing where cable is for a sale. And what I was going to say is what's going to be key is the 2-week reversal, which in cable, it's way down here. We didn't even get there yet. It's at 35.31. So, you know, we didn't quite get there, did we? 35.31. 41. All right, so it's playing with the 2-week reversal. I would say taking out this level looks like we might be flagging here. Will give us a weekly. You start off with the daily, and maybe you'll end up with an outside week to the downside reversal. And that, yes, I do. It doesn't have, you know, it had turnaround Tuesday was Monday. So I know that we're going to try and bounce back here, but here you go. Key reversal. All right, so you're wrong over the high. Maybe you get a rip back to 37.25 or so. 37.50. How about up here? Say 37.40, you're wrong over the high. And NAS, which wasn't as weak. Maybe we get back to these prior lows, 12.8. It's only 120 points, you know, and we have event risk, or it could be positive tonight in Georgia, right? So if those Senate seats don't both flip, I think the market will be happier than if they both flip. Even though it means more spending, I think the market wants to check on it, probably more for not raising taxes or tax policy more than for fiscal or infrastructure spending. I think they both could go for that. But I don't think a McConnell-controlled Senate is going to go along easily with the Biden's administration if he ends up, being in the White House. Tax policy. All right, so same type of thing in S&Ps. You have a key reversal right here, and the next step, and we're already under the 2-week off number. I think we're trading. I think it's 3704. Yeah, 3704.60. So we took that out by quite a bit. And I know it's only Tuesday, but you could actually end up with a weekly key reversal. Okay, so you have a daily, but you don't have a weekly yet. And to me, this 3600 level looks like a magnet, like it has destiny. You have the 50-day and this major support level and this wick here at 3600. So yesterday I said if we take this out, maybe we could trade the 34 handle. I know some people looking for 35.50, and then if that doesn't hold, down into the 33s. So, I think there is a decent chance that we do have a top. I don't think it's going to be the top, just maybe 10% correction, which would be about 380 points from 38. What's that get you? 3430-ish, something like that in here. Okay. So the commodity currencies, the jury's out. Jury's out. I'll take a shot at new highs in Aussie. I think I'd prefer Kiwi, and Amanda was talking about a third drive, and it was a good idea. Here's 1, here's 2, and here's 3 up there. But I didn't like the 2-hour in here because it had confirmed up here. Forgot where it was, but it had confirmed. But now if we get, well, I think this will be the third if we get up there. So this time, if we make a new high, I don't think we're going to have these kind of readings. If we're under 70 at new highs in Kiwi, I'm going to take a shot. Any questions on anything I've covered? So the jury's still out on Euro. Cable, in my view, is just a guess. That's what I do, I guess. I believe Cable is convicted of a top, as well as stock indexes. Sell rips.
So?
I think so.
You think so?
Yeah.
Well,
and the dollar, the jury's out. We could still get another low.
Yeah.
What's interesting, Blake, is that really the stock sell-off did not produce much of a dollar bounce, and it wasn't the dollar that led it. So I think the most vulnerable, that stock indices are more vulnerable than, say, the dollar bears are.
Well, let's talk about what's coming up. You mentioned it. You mentioned it earlier. We have an election, Senate election coming up tonight.
Right.
I think you have to be really careful with the dollar here because, a couple of the banks, I think Citi and Barclays, as I was reading, they're looking for Republican sweeps, right? When they wrote their analysis, they're looking for Republicans, to
hold both seats.
They're both seats. It's going to be a sweep.
All right.
Therefore we'll have some gridlock. Dollar may bounce a little bit.
Market will like it.
That type of what?
Stock indices may like that.
Yeah, I mean, stocks should. I think stocks go up regardless. You know, because let's look at the alternative. So now the dollar hasn't been acting well. You're right to point out it hasn't been acting well. But let's think about the reason why. What happened yesterday that was pretty significant? And it had nothing to do with currencies. But what happened yesterday that was significant? There was a phone call that was
Oh, to Georgia,
released.
the guy. Yeah.
Yeah,
Yeah.
the phone call. Wow, I don't know why my webinar thing just said webinar online. Did you hear that? That's
No, I
weird.
didn't. But Blake, can you
Uh,
find me 12,000 not votes dollars?
yeah,
I don't
okay.
want votes. Can you find me $12,000?
So, if you think about that, he may have single-handedly turned that race. People are enraged right now, and rightfully so. I mean, you listen to the phone call, and you could sit here and say, "Well, you took it out of context." But I listened to majority of it, and I think
It
probably
was
some of you guys did. Like the hour-long call. It's like I hear what he was asking for, and I mean, there's a lot of people that are really up in arms about this. So, what could have been or should have been a Republican lock maybe is a little bit up in the air right now. So the dollar has been acting poorly because look, if Democrats retain or take the Senate, you got a situation where you're going to get some pretty big bouts of liquidity thrown at the market as a whole. Now, stocks should like that, and the dollar should really not like that. You should see stocks go higher. If Democrats take the Senate, you should see, we're going to not only get a stimulus coming up, we'll probably get multiple stimuluses over the course of the next 6 months, and the dollar is going to get wrecked. I mean, that's the attitude of the market, and I think that is scaring people from buying dollars right now, right?
yeah, I just think it's there's plenty of reasons not to like the dollar, and that's why I think a rally's coming. I can't think of a reason to like the dollar.
Yeah. So, well, okay, and so that there you get the consensus view.
And not
The
only that, Blake, if you look at the daily, I mean, I don't care what your biases are in the market, but when you look at, well, that's a 4 hour, but look at this. Uh, it's pretty glaring here. And if you cover up the title and you didn't know it was a dollar, you might be, thinking, there's some pretty glaring divergence. Maybe this thing's due for it. And I'm not talking about anything huge, but maybe back to here.
look, and that's the point I want to bring up is the dollar looks bearish, and based on what probably is going to happen. Well, let's just throw it out there. What could happen tonight? Let's say the Democrats take the Senate.
Yeah.
So you have basically Democrats in control of the president, both houses of Congress. The dollar should get just thrashed upon. It should just get absolutely destroyed. Now, in that scenario, as you're pointing out, and I'll pull it up here. I do think the dollar, I have to also say I think the dollar's bearish. Obviously you have the euro and ascending wedge here, and we're at all key levels. And I tweeted out a chart. Basically, we're at the 161% extension of the COVID spike. Okay, and we have this inverted head and shoulder pattern setting up. So,
yeah,
I mean, if the Republicans win these two Senate seats, which again, this was the consensus really before everybody heard that phone call yesterday. And remember, there's people voting today, so if his phone call didn't do anything to disrupt the election and Republicans retain those seats, the dollar should get a relief rally. We should. You know, how long will it last? Probably not long. I mean, you know, we might make it up to 90 and a half. You know, we might complete this inverted head and shoulder pattern, which that's how I'm viewing it right now. So we could, you know, do one of these.
Nice
You
look.
know, yeah, I mean, you know, you get back to 90, 50, and then you sell into strength. I mean, that's what you do. And that seems like a realistic expectation for the dollar. Republicans win. You know, we maintain balance in Congress, and the dollar gets a little relief rally. That seems like the most likely scenario. Yeah. But now the question marks are all raised about that phone call and, you know, the Trump phone call with, you know, in Georgia, and if it does sway the vote and Democrats win the Senate majority, the dollar, we might do one of these, like, you know, and I can't help but, you know, notice all the divergence. We might actually do one of these, you know, down to 89 and then bounce.
Buying it if it happens.
I think over the next couple of days, you have to play it counter trend. I think the dollar's so oversold here that a new low in the dollar would be probably a buying opportunity. That's the way I'm looking at it. And I could be wrong too. I mean, I could buy the, you know, for all intents and purposes, we drop to 89 and I get long dollars, which I don't buy. It goes
to 87.
Yeah, I'd short the euro. I mean, it could very easily slip to, you know, 88 and a half after that. I'm just saying that's probably how I'm going to approach tonight as a whole. So I hope that makes sense. So does Blake. And I think that today, Dale, just looking at what we've got here, I wouldn't be surprised if we just kind of, you know,
hang around.
Yeah. You know, do one of these, you know, kind of the dollar kind of comes up a little bit towards, you know, these levels, you know, something like that, you know, before we, you know, make a move this evening. That's what would be my assumption would be. So anyway, just some food for thought.
How about S&Ps? I mean, we did have a over 100 handle drop from yesterday's high to yesterday's
crazy,
low.
Huh? Well, the S&P.
I think that's significant.
Wait, since we're here, let's go ahead and just fill out the bias chart, and then we'll just look at the S&P afterwards. So we are in a bearish trend for the dollar. You know, support 89.60, resistance, and remember the 89.60 and then 89.40. So I'll write down 89.40, 89.60, and then resistance is at 90, right? Yeah, basically 90. I mean, you know, we might as well just write down 90 because that's basically what it is. So 90, and that's key. That's key resistance there. All right, so let's talk about the S&P. So you were just talking about the big 100-point drop yesterday. That was like pretty strong, huh?
Yeah.
Yeah. So
I think Steve would characterize that break as impulsive, and now we're getting some kind of corrective action.
We are, but here's the other issue, as we have been pointing out. There's a channel.
It hasn't broken it down yet.
Yeah. So am I super excited about, you know, the prospects of downside in the S&P? Not yet. But I think personally, if we break through yesterday's lows, then you're risking an actual move here. So, you know, if you take this flag pattern that's developing,
right,
you do that. Now we're at risk of a move towards 3,600, which you guys know 3,590 is all big. It's huge support.
Yeah,
that's why
it's a magnet. I mean, it's a bull bear line. I don't care, you know, if you're a bull or a bear.
Yeah, exactly. It's right takes us right back down to support. So I think for today, we got to watch the 3660 level. That was yesterday's lows. Then resistance is, I mean, I would probably look at this previous support here.
Yeah, that's a good level. or that horizontal area.
Yeah, I mean, if we get a little bit of a rally today, which we rally every day, so why
40 handles, yeah.
Yeah, the 37.25. I mean, but we also have to note that we are in a very bullish trend, and while we're above this 3600 or 3590, you just have to be aware that we're in a bullish trend, and trade accordingly. Don't if you're going to fade stocks because you want to, let's do it gingerly and carefully. All right, so anyway, Dale, there's a view of the dollar index, the S&P. Hopefully you guys have some of my thoughts now on what we're looking at as far as the Senate race tonight. By the way, we could have results as early as tonight. Some estimates are around midnight Eastern. I don't know if I'm going to be able to make it up that late, to be honest. I mean, I'm going to probably have to just go to sleep and deal with the market action in the morning. But if you guys are in Europe, some of you could go to sleep early tonight, get up early, and be able to be around for some potentially volatile price action in the currency market. So just keep that in mind. It's going to be a late night for some of us. All right, so let's go into the euro dollar, and let's just start here. We're going to go through our analysis. So you guys know we're in an ascending wedge. There's really nothing to do right now other than a break of this gap fill here, which would be 122.20. That would be a key level to break, and it would take us out of this bullish trend and put us more range bound for a while. Do keep in mind where it's a very bullish move, and even any temporary setback in the euro, if we break these trend lines here, this is the ascending wedge 4-hour trend line, I expect very limited downside. We may get to like 121, maybe, but we'll stay above 120. I don't think that a move below 120 would be very shocking at this point for the euro. I don't think many people would expect that, and don't expect that. So resistance is at 123, 123.10. As I think we wrote that down yesterday. Let's double check that. 123.10, 122.15. So since it's a rising trend line, that makes sense that today is 122.20, right? Resistance 123.10. Cable. Yeah, we broke back through this 136, and I'm more scared that the cable can break back below this broken descending wedge, multi-year trend line here. Remember, we broke out last week, or Brexit week. We broke out long term. So what would really frighten me if I was long, the cable
back
right now,
inside.
Oh yeah, if we get back below like 134,
Yeah.
I would not want to be long. I mean, I'm just telling you right now. If we drop back here, and you can see that's a 618 retracement of this move now. So here's the low, here's the high, right?
Right.
618 comes in at 133.85. You do not want to see below that number right now.
Great look.
Yeah, I mean, because look, we got some false breakouts. This little double top here, couldn't break back above it. So now that resistance is, let's just call it 136.25, roughly. Oops, 136.25. And that is, it's bullish for now, but you got to be a little careful. Hey, Dale, did I tell you yesterday I cut all my hair off?
I saw you were going. Why don't you put the camera on and see what you look like?
Oh, well, remember, guys, it's like I've been up since like 3:30 in the morning. I can do that. But
how long did you go without a haircut?
Can you see me?
Yeah. Oh yeah, that's a high and tight on the sides, and
yeah.
Looks
Oh,
good,
there I
bro.
am. Okay, yeah.
It feels
Excuse
good
me,
too,
my
doesn't it?
office
I
is a
need
bit
one.
of a mess right now. But yeah, my hair was I grew it out all the way through COVID. So
Yeah. I thought you were going to go join a rock band.
it was getting long. I couldn't do
Yeah.
it anymore. I just couldn't do
Okay.
it. Anyway, good morning, everybody. This is what I look like in the morning, and yeah, it's
Blake's got a flat top.
it's not a flat top. It is not a flat top. But everybody
Did you buy some of that crew wax to do
everybody
the front?
told me I look 10 years younger, and you know, I'm almost 50. So
Oh God.
yeah,
I can't remember.
so I'm hoping it went like I was 40 looking, and now I look 30. That would be great.
Sinatra says 30, you look 35.
That's awesome. I'll take it.
Right,
I'll take you. If you want to card me for alcohol, I'll take that too. Anytime.
Although a few of the guys spotted a few gray hairs on you, buddy.
There are grays.
All right.
I know.
Welcome to my club.
All right, that's it.
Go ahead.
You guys got my early morning look, which you have to realize, you know, I get up and I'm the only person awake in our home
in Arizona.
In Arizona, so I get up at weird hours. I'm up at 3-4 o'clock in the morning. You know, I'm still a couple hours away from before I even jump in the shower. So you guys get my early morning look. That's what I look like right out of bed.
You're a movie star.
No, I'm just saying that you have to give me a little bit of a break there. All right, let's go into let's finish up these charts here. So the sterling support, what we should be watching the overnight support, which is 135.35 roughly. And below that, I think we need to be, you know, cognizant of a dip back down to the 134.30 just in case. I'm going to write it down just because I think it's important, because it could possibly break 134.30. I think is what I had. Okay. Aussie. So the Aussie still acting really well. You know, the Aussie's bullish. We pivoted yesterday at really key support. Now, yesterday, what did we write down for support yesterday? Yesterday, we wrote down support at 76.85. We dropped all the way to the breakout point. I didn't think we would make it all the way down there because we broke through this support. So we came all the way down to 36 or 76.40, which means that this breakout point is now very, very significant. So 76.40, super important support, right? Super important support. And we are still bullish while we're above it, but we break below that and it will turn bearish. Okay. We might be developing a wedge because we're capped here. So we might be developing more of a longer term wedge that, you know, or it could end up being a triangle. Who knows? Anyway, support today, we already got that. So resistance right now is at 77.25. Still bullish. Kiwi, same as the Aussie. Bullish. We actually held, we dipped slightly below, held that trend line. So that means that trend line is very significant. That means this breakout point is extremely significant for today. That comes in at 71.70. Really quick, you just make sure we don't have any data coming out. This is ForexAnalytix. We have consumer prices coming up in a few minutes from Canada. So we have some Canadian data coming up.
Not really important, Blake. So
yeah, I don't think it's going to be a market mover. You're right. And good morning, Stelios. How are you?
good morning. Very well. I have no hair, by the way, so I look like 30 years younger.
As I told you yesterday, I've been bald a couple of times. Once in boot camp in the Marine Corps in 1990, and then in 1992 when I went to Africa to Somalia, I shaved my head again, and I realized that my head is not completely round, as round as it should be to have a bald head. I think my mom left me on one side of my head a little too long. So therefore, therefore, I don't do bald well. No, I think it's actually because I just have chubby cheeks. So resistance here is, we're just gonna have to mark up the highs, which is 72.40. Since we have some Canadian data being released, which isn't moving the market right now. Now, here's the thing about the Canadian. And if you use ForexAnalytix, we had a very fast pattern in play yesterday. You can see it right here. It was 126.95 to 127.10 because we had this false breakdown, right? And then the target, I had it at 128.30 in case we reach back up here towards the 618. But when I noticed that we were capped by this trend line, I took it off. I took it off at 127.95, sorry, which was right at this trend line here. And I'm like, I didn't think we were going to break it yesterday, and we didn't. And you know, we pulled back. Now we've pulled back to the 50 here, so you can see why I played that yesterday. And by the way, those are patterns in play. We do a lot of trades through, you know, in the chat rooms and stuff. But these are stuff that meet like pattern requirements, like technical requirements, and so you know, the team and I, we put those out every once in a while. But anyway, looking at the dollar Canadian now, we're holding the 50% retracement. If you were in the chat room earlier this morning, I was buying the dollar Canadian at 127.31. I sold, or at 32. I sold it at 47 this morning, and you know, because I was going to be here. So let me just point this out, guys. Here's our chat room, okay? And you guys are on Jumbotron, by the way, for those of you that are in the chat room right now. If you are in ForexAnalytix, this is our platform. You click this button right here. It takes you over to the chat room, which is right here. And there's Chad. Hi, Mom. There's Amir, who you guys remember. Amir was a wonderful guest just a couple weeks ago. I'm going to show you from the time that I got up. Good morning, everyone. 4:42 in the morning. That was 2 hours ago. This is all the chatting that has happened in the last 2 hours. That is the last 2 hours. You know, see how active our community is? That's how active our community is. So if you guys want to be Stelios thinks he's funny. Stelios, you know I can talk to you right now.
Yeah, I know. Sorry. Bad joke.
So anyway, if you guys want to be part of the ForexAnalytix community, there is no better time, because this webinar is brought to you not only by Pepperstone Securities, but also by ForexAnalytix. And this is our start of the year pricing offer that we only offer a couple of times a year. So, and it'll be live for the next week or two. Take advantage of it. Because when it's gone, and you won't see it again for months. So, and if you want to learn how to get ForexAnalytix for free, potentially, go to the Forex Sponsored tab and open a Pepperstone account right here, like a live trading account. And then you can get ForexAnalytix for free for a couple months. All right, I'm not going to go into any more of that. I got to really finish up the bias chart so I can pass it over to these guys. So let's go over to the Canadian, dollar Canadian. Support today is going to be 127.30, resistance 128. But if we break above 127.75, it's going to be bullish because we'll break that downtrend line. 1.28. This is 127.30. We are in range. Remember, the dollar Canadian's in range. The Kiwi's bullish. Dollar Swiss is still bearish. Nothing changed there. So we wrote down, I think yesterday, we wrote down 88, I want to say 87.80, I think. Let me see, 87.80. Is that what we wrote down? 87.75. Well, I'll still go with that level today. 87.75. 87.75. It is bearish. And resistance is 88.60. We are in a bearish trend. Dollar yen had a false breakdown yesterday, but it doesn't really matter. Well, actually, let's stop here for a second. You guys know I'm really not trading the dollar yen at the moment. I don't know how to read it. I think you stay bearish while it's below 104. So bearish 104. That trend line, that red trend line, you stay bearish while we're below that. But you can see we hit, like yesterday, we hit a new low and we bounced. Now this trend line goes from the spike low, COVID spike low, to what, a couple weeks when we hit there, and then we broke that low again, and then we pop right back up again. It's really hard to chase it lower. So I'm just going to write down 102.70, and frankly, if we get down to like 102.50, it probably is going to bounce right back, because you can see it keeps making false breakdowns. So I'm just not trading it. I'm just pointing that out. Dollar MEX is holding up very well. There's a few of us in the chat rooms that keep picking it up down here in the 1970, 1980 level. Today, 1980 resistance, 2020. Well, I just write this 1970 because that's ultimately big support. And it's in a range. Remember, after we came out of the descending wedge, we have become range bound. Okay. US dollar, Norwegian krona, same thing as yesterday. 865, 847, 847, 865, bearish trend. Last but not least, gold. Gold's bullish. As Steve pointed out yesterday, as we broke above this downtrend line, what I was hoping for yesterday is we get a dip in gold before a rally. It's just not happening. So any dip back down to 1905. Oops. And then resistance is 1965. Okay. Stelios, Steve, Dale, I'm finished.
Good morning, everybody.
Good morning.
Good morning. Good morning, Stelios. So what's going on? What's happening today? What should we be looking out for? What should I buy? Where's my hair gel? What's going on?
Well, I think the main story today, obviously, apart from the whole U.S. Senate thing with Georgia voting coming up, I think the main thing is the UK again. And unfortunately, again, it's for the wrong reasons, because they're going into lockdown until the end of February. And I have quite a few friends and my brother in London, and they're all telling me that this is really not good. Rishi Sunak did announce today, I think it was just under 5 billion of aid again, but it's clearly, well, considered not to be enough. And I don't know how this thing is going to pan out, but the prolonged lockdowns are definitely not good at all for businesses. I think we all know that.
Yeah, I live, by the way, my wife informed me yesterday, we live in the most virus infected place in the entire world.
Really? More than California?
Wow.
Yeah, Maricopa County, Arizona.
More than
Arizona
LA
is
County? Wow.
Huh?
More than LA County? I thought LA County
yeah,
was...
apparently we've passed Los Angeles County.
Wow.
Because people here where I live just don't care.
Yeah.
They go about their lives. I mean, there are people with masks, obviously, but
that's sad, actually.
We live in the Wild West.
I
can carry a gun.
That's America. Yeah.
I have guns and I can carry them on my hip, and I can not wear a mask if I choose to. that's kind of the way it is around here, and it's sad because we are suffering.
Everyone says this. Those people say it's their right. It's infringing on their freedoms. I don't think it's a freedom to infect other people.
I mean, look.
You
gotta. I look at it as you gotta
Okay.
try to protect the people that need protecting, and if you're
That's
okay
why.
with, if you're okay with possibly dying or getting sick for several weeks, then
But it's not just you.
not wear a
Okay,
mask.
they
Go
could
ahead.
accept that. Okay,
that?
I'll risk my life, but I shouldn't be risking others.
Yeah, that
I'm sorry, Blake.
I hear you. I hear you. Believe me, I hear you.
Anyway, don't get me
I live it every
going.
day. I got it. I get it.
All right. Okay.
Anyway, hey guys. So, I think Steve is here. Steve, how are you?
I am here. I'm fine.
Hey, good morning,
How have you
Steve.
been, guys?
Good.
I'm
I know we
aggravated now,
have the
Steve.
Senate runoff, and Stelios was just here. We were just talking about it, and I think it's something that we have to be watching because I think it's going to inject some volatility before, and we have also today, and then what else happens tomorrow? Tomorrow we have the confirmation of all the electoral votes tomorrow, right? And as far as we know, there are several senators or people in Congress that are not going to confirm Joe Biden's, or they're going to contest the election results, right? So we have a couple of tricky days in politics that could really influence what's happening in currencies and in the S&P and risk appetite. So I'm going to say this to you all. Trade carefully the next couple of days. Be careful. Don't get big, and don't be. It's okay to be wrong. It's not okay to stay wrong. It's the best way I can put it to you guys. It's okay to be on the wrong side. Cut your losses and move along. Do not stay wrong, because it could turn into something really god awful. You know what I mean? All right, I guess that's all I have to say about that.
Which in general is a solid advice, even when there is no event risk.
Right. Yeah, it's something that, I try to reteach that to myself all the time, because I'm like anybody else. I fall into the trap where, no, it's going to turn around. I'm long this, and I know it's down a little bit, but I'm going to stick around and just widen up my stops. And then I have to reteach myself constantly. Hey, you're wrong, man. Get out. Take your loss.
And that underlines the importance of having a methodology, for example, using a trading journal, because it forces discipline. Because when you force yourself to have a plan in advance, you can take the emotion out of it following on. I mean, instead of starting to hope when things are not going right, you just execute your original plan. If it means taking a loss, you're taking a loss and moving forward.
Yep. Hey, one last thing before you guys, before you take over, I just want to reiterate, this is the dollar index. We're at the 161% extension of the post-COVID lockdown last year, that move. That's why this is such important support. And I really want you guys to focus on two levels. Above 90, we should get a counter trend rally in the dollar index that might last 50 cents. Below these lows, we might get one last move back down to 89 before bouncing. So everything's very divergent. So I think that a new low in the dollar index would result in a bounce. That's how I'm going to approach it. But just with everything that's happening the next couple of days, just keep your eye on this chart. All right, I'm gonna pass it over to you guys. You guys have a great trading session. Good luck. For those of you that are part of the ForexAnalytix community, I will see you on the daily roundup webinar in 3 hours and 45 minutes to give you an update of what to look for going into this evening's election, as we do Monday through Thursday for our ForexAnalytix subscribers. All right, see you guys later.
Good haircut,
Bye-bye,
Blake.
mate. Thank you. Bye-bye.
Good haircut. Don't you guys think?
Hey,
Look,
thank
did you see Blake's haircut, guys?
Absolutely.
Yeah. Oh, nice.
Yeah, look
He
at
looks like the Terminator.
You're muted, Blake. You're muted.
Don't give him any ideas. He knows he's muted. Don't give him ideas about terminating. Okay.
All right. Yes, what Blake was saying was very true. I've said this before. I think it's worth repeating. I'm very lucky because on my first trading job in London, the guy who basically showed me everything, one of the first things he said to me, he said, trading is one of the toughest things to do because you're hardwired to do the opposite of what you should be doing. So you're
What is
hardwired
right?
to let
Yes.
your losses run and take your profits quickly, and you have to overrun that and teach yourself to not to do that. And he said this to me in the first week, and he said, don't get married to trades, accept the loss, learn to accept the loss. And that's, once you learn to do that, then it becomes a lot easier. But because otherwise you just don't accept the loss, and the loss becomes big enough to actually ruin you.
Well, you know, my mentor was Nick Leeson.
Nice.
At Barracks, and he told me, let your losses run and scale in, and if you like something at $1, it's got to be a screaming buy at a nickel.
Yeah.
Huh? You like that method?
I wouldn't recommend that.
Although I think, yeah, he went to jail for that trading methodology anyway.
Yeah.
So
Paul's
okay.
mentor was Bernie Madoff, probably. So don't feel
Paul,
bad about it.
No, he had,
Yes.
he had Bernanke. Same thing.
Anyway,
The funny part is that they had interviewed like Bernie Madoff, like rather recently. I think it was like a couple of years ago. And he was like, explaining how the whole central banking thing is a Ponzi scheme.
Yeah.
So
you should know.
So of course everybody else was afterwards like, yeah, okay, what do you expect? I mean, this guy, he has no credibility, etc. Actually, when it comes to Ponzi schemes, he does have credibility.
The master.
Yeah, he's an expert. Yeah.
Yeah, I mean, he might not have credibility about everything else, but having to do with Ponzi schemes, I'm pretty sure he knows one when he says it.
Hey guys, what do you call a crime of someone who goes into malt shops and takes his fists and pounds on the jukebox to make it work? A Fonzie scheme.
A Fonzie scheme. Oh my God.
Oh my God.
Oh my
I
God.
knew something was coming.
All right. Okay.
All right. Anyway.
So,
hey, Fonzie.
Hey, that was a good show. Yes, so we're talking about the US and the UK lockdowns. Germany is going into lockdown until the end of the month. And just like our friend, who was it who wrote it here? Hold on, let me just find it. Somebody wrote here that it's basically self-employed people don't get bailed out or helped, by all these stimulus.
They do in the US.
Do they?
For the
Okay.
first time, yeah.
Oh, that's
in the
good.
US, they do.
But anyway,
in many other countries, including Greece, most of the cases they're the suckers. They end up being the suckers, unfortunately.
Yeah. Well, yeah.
Anyway, it's
independent contractors are the suckers. Yeah. Go ahead.
And this thing, prolonged lockdown is obviously going to take their toll, and it all comes back to what people talk about: liquidity versus solvency. The central banks can add liquidity, but actually solvency, businesses and all that, it's very difficult to keep a business going in these circumstances, unless obviously you pour money into their accounts, which, governments are not. They, obviously they give you some stimulus checks, but really this is not nearly enough. So
what a great point. Why don't you explain the difference between liquidity and solvency, and just because the Fed has a ballooning balance sheet doesn't mean that Sammy's Diner in the neighborhood is going to be able to take advantage of it.
Yeah, well, it's as simple as you said it. It's because the Fed can add liquidity using a certain number of methods, and the way they're doing it, with asset purchases and they're even buying bonds of corporate bonds and all sorts of stuff. That doesn't mean that it will get to, like you said, Joe's Diner. So it's a problem, and I think that we're slowly getting to a point where all these issues now are going to get bigger, and unfortunately they're going to affect businesses. And it seems ridiculous to me that we're at all-time highs or near all-time highs in equities, even though money supply has been increasing exponentially, and that should bring asset valuations higher. But you have to take into account this negative aspect of the whole COVID story and how it's still impacting employment. And unfortunately, a lot of the temporary unemployment is going to become permanent unemployment. So, you have to be cautious. Obviously, stocks don't care, they keep going. But, I'm not saying short equities, because if you've done that over the past months, you're dead. And I'm not short, I'm not long either. So I've missed this run. But I'm just saying that we have to understand all the risks involved and what could happen in the next few months as things evolve.
The name of the game has been extend and pretend in everything, Stelio, and that's why for years and years now, we see the percentage of zombie companies, and by zombie companies, we mean the definition is companies that actually, can even barely, in many cases, not even service the interest to their debt. But other than that, they can stay typically solvent just as long as interest rates are artificially low, because of course having like corporations with huge piles of debt that are in essence insolvent, having extremely low interest rates just because the interest rate market is completely broken due to the Fed, allows some of those companies to stay afloat, but in essence they're companies that can never recover and can never be again profitable or productive.
Talking about that, Steve, I know that you were open to both scenarios in the S&P's continued blow off. Was yesterday's break impulsive enough for you to now give the downside a little consideration?
On the short-term charts,
yeah.
Yes, I mean that's what you can see here, for example, right?
I mean, you haven't seen a key reversal in quite some time.
Yeah,
that's what it was.
But it is a key reversal. Yes, we did have a new high, and we had a very nice outside day. We actually yesterday's outside day covered like, what was it, 6-7 days of price action.
Yeah.
So the candlestick is interesting, but I want to remind you that we also had another interesting candlestick back here at the end of last year, right? So it is once again a nice potential reversal candlestick. And we know that we've been seeing divergences having to do with the RSI. Here's the RSI, having to do with the VIX. Here's the VIX.
I was going to show the VIX over 29. It's going to look pretty good.
Here's the VXN as well. It's the volatility index for the Nasdaq. For those that don't know, was also here clearly divergent, right?
I mean, why not a 10% correction just to so people could reload?
Yes, and as Blake said, there are a few things happening within the next couple of days that have the potential of producing some type of a short-term upset. But I want to make clear here that if you want to take a short-term trade, meaning be short here, put your stop loss against the highs, look for at least one more leg lower, for example, to retest this spike low as an initial target. I can't blame you. I mean, from a technical perspective, it's a very, very valid way of trading this. But as a reminder, on a daily on the daily chart, there is still no technical damage done. So you need to be cognizant of that. You need to be cognizant that there is an appealing risk reward following yesterday's price action. But I'm not sure the odds are in your favor. You just have a nice potential setup. So what I'm trying to say here is that you probably don't want to, bet everything.
Yeah, it's like a 50-50 probability, but at least you have some technical action that showed it didn't accelerate to the upside of that rising channel you had and threatened the bottom.
Yes, and to be honest,
why now?
Yesterday we were at the highs when we were at the webinar, and we were talking about the possibility of even having like a parabolic move out of this wedge.
Yeah.
It's also a nice signal, the fact that, that was a false intraday breakout, right? So that's also, a nice signal. Perhaps there are some people that, that just can't sit on their hands and, wait for a daily close, which I always want to do, that perhaps got overly enthusiastic and, bought early yesterday thinking, that, the move might extend even.
You also are a believer in reversals happening at the beginning of a month.
Yeah, absolutely.
We're at the beginning of the month and beginning of a year.
Yeah, it's not an astrological belief.
I'm not saying
it's purely mathematical and statistical.
What's your sign, by the way?
Observation. The same as yours. You know that. I'm.
No, I didn't know that. Oh, you are?
Did. Yeah.
Oh, I was at a restaurant. Some girl was eating dinner, came up to me, and I wasn't interested, and she said, "What's your sign?" And I said, "Stop." Anyway, all right. Go ahead. It's a stop sign. Anyway.
That's a good one.
All right, man.
She obviously wasn't really good looking, right? Be honest with me.
Yeah, I wanted to finish my dinner. Anyway, we're being the chauvinists here. So, all right, we got an alert on the S&Ps. What's it doing?
Here it is.
Yeah.
It's looking heavy, to be honest.
It is.
After this rebound, it's looking heavy. As I said, from a risk reward perspective, makes sense. I'm even considering it. I took a short here when we were here, and I then de-risked it. So I ended up losing, I don't remember, like 5 handles, something insignificant.
Yeah.
I might do the same today. I've been contemplating about it since a couple of hours ago. I don't know. I'll, perhaps I'll make up my mind by the end of the webinar or, within the next hour. I'll see. I might take a little stab at it.
And Stella, I hope I didn't cut you off from what you were saying. Did I? I do that. He's gone now. Okay. All right, Steve. So I'm looking around for my guests. I don't see them. So if you want to.
Yeah, we have more things to talk about, and absolutely. So to begin with, since I know that Blake covers a lot of the FX, so no need to waste much time on it. Just a little observation. I'm paying close attention to USD MXN. I like the fact that it's now stuck between the previous channel and this trend line support. So it looks like a symmetrical triangle, but the resistance is quite important, being the previous channel. And keep in mind that this is also a nice barometer for risk. Yeah. So this is an extra reason why I'm paying attention to it. I think it's going to give extra credibility to a potential, acceleration lower in the indices if that actually happens. Blake already showed the DXY chart, and of course, it's we know how it connects to that. Yesterday's price action in crude oil, you can see yesterday's candlestick was, of course, not of course, but as frequently resembled what the S&P did. Yeah. So don't be surprised, because it's going to be very, very probable scenario that if indeed we see the S&P breaking down today and accelerating, you should expect the crude oil to do the exact same thing, and that can be a nice signal for finally getting some type of a corrective price action here. As with the rest of the assets, the crude oil market was also clearly showing some RSI divergence here, right?
Technically it looks good. The only caveat I have is, we are sending nuclear armed B-52s to fly over Iraq, and who knows what could happen in the next, 17 days.
I don't disagree, but since I can't predict the future having to do with
I'm just
political developments,
you're probably better off day trading it than taking it home overnight.
Now, having to do with natural gas, we spoke about it yesterday. Testing resistance as we speak. I think it looks good if it breaks higher. I mean, this move lower looks technically perfect as a corrective move. So I would really not not be short in any type of form if we break above it.
That looks good.
Now gold holding up quite nicely, silver holding up quite nicely. I'm still almost convinced that we've seen the low of the correction, so I think the path of least resistance remains higher. Same deal here with platinum. Palladium still coiling within this larger symmetrical triangle, so be careful here. I think if it breaks higher, it might actually explode higher, so you should definitely pay attention to it. Copper consolidating. I don't see any real signs of weakness yet, but you never know if risk really sours.
Yeah.
Probably it's going to get hit somewhat, right? So from a risk reward perspective as well, after such a huge move higher, clearly this is not the place you want to be buying copper. Now let me see if we have any more questions.
Yeah, I'm looking. I don't.
What about your guest? Any?
Nope, I don't see him. Kevin Wadsworth, are you in the house? If you are,
just type it.
Hit me in the chat box.
Oh, we have a friend asking yesterday as well. He asked about like the Nifty. And speaking about the Nifty, we can have a fast look at more indices than that. Here's the DAX that got rejected yesterday from this expanding triangle from all-time highs. Keep that in mind. I still don't think, we can move lower from here, but I still don't see any real technical damage. We can even go all the way back to 13,000 and it's still going to be looking, quite healthy. FTSE, quite a similar formation, but not at all-time highs, and we know what was weighing down on it, and it was, Brexit and, all the expectations. Here's the Australian stock market coiling near the highs. I think it looks rather healthy. Here are Chinese stocks having just, sorry, I had to sneeze, just broken out from a recent range, and I think they look quite nicely. Here's the Nifty that our friend is asking for. Nifty clearly accelerating after breaking through the all-time highs. Listen, we're clearly very bullish, but we're clearly very, very, very overbought. And we've started showing some signs of a divergence. So at some point, first of all, this is not the place to be buying anymore, right? There's no question about it. At some point, I think we might have to return back, retest the previous high as support before we move higher. That doesn't mean we have to do it now, right? But clearly buying here makes no sense. Bank Nifty also remains well bid. Of course, it's diverging with the Nifty. It hasn't even produced a higher high. I've explained multiple times why the banks will always lag what the rest of the things are doing is because the banking model is more or less broken.
You know what? You know what supports that, Steve? One of our guests, Peter Goldstein, when he was calling for new highs in NASDAQ and S&Ps, several hundred handles ago, said that the XLF would not make an all-time high and it has not. So if you put up a long-term chart of the banks, and I was liking them on, I thought yields were going up, but if you look at XLF now, I don't know if you have it.
Yeah, I'll pull it up. By the way, this is the emerging market ETF. That's also interesting to pay attention to. Look at it at the all-time highs.
Nice.
Yeah.
But
so
the XLF is not making new all-time highs. In fact, it's into a big gap zone, and if yields are going to start to fall again, there you go. See.
Yeah, as I've told you before, the problem why banks can't really catch up to what other assets will be doing is because the flattening of the curve destroys their ability to be profitable. But on the other hand, when, I'm not even going to say if, when the curve starts to steepen more than a little bit, that will put a huge risk to their asset part of the balance sheet. Yeah. So it's a lose-lose situation, you know what I mean?
Yeah.
In one case, as long as yields remain low and the curve remains flat, they can't really make money out of traditional banking. On the other hand, if that reverses or when that reverses at some point, there is a big risk that a lot of the loans they've given, etc., they're just going to default.
Yep.
That's why the banks can't really be looking forward to, like,
Well, they
you know,
look like a good short for a correction up there.
yeah, I mean, you know, in
Not
any
for new
case,
lows, but a correction.
in any case, when risk seems to be rolling over, banks would be my preferred short in any almost in any case. You know what I mean?
Okay, yeah,
For the reasons we've already explained
that's why I brought
in
it up.
detail.
In case Americans want to do it.
Yeah. So, what about your guest?
Nope. Kevin
Okay.
Wadsworth, North Star. And you know, he's a professional meteorologist. Okay. I can't control other people. All right. So, everyone, take advantage. Steve, show our offer.
Absolutely.
Okay. I want you guys to take a minute, take a deep breath, and ask yourself the question: could more analysis by Gregor Horvat, show Gregor Horvat, by Andre, by Blake, by Steve, by Stelios, being in the chat room with Amanda, could that be worth 8-9 pips a month? That's a good question to ask. Do you think having that type of input and all the research that's on the site, let's talk about the cost, and with the promotion going on, is it worth 8 pips a month to be able to reach out when Face is not here and go to go to the website and pull up different time frame charts from Greg, from Blake, from Andre, be in the chat room with Amanda and all the guys and be able to ask a question. To me, you guys risk every time you click your mouse. I bet that 70% of you are risking more than 9 pips every trade. So that's really the question on any service. Is this worth 8-9 pips a month to me? If the question is yes, this is a good time to do it. And I will tell you this, that I am fortunate that when we're not doing Face, that I could do what I'm telling you to do. Because there are many times I'm in the market and I go, you know what? I wonder what Greg is thinking here on, what's the count? Does Andre have any harmonics that are pointing towards this area where I see a potential 3 drive and divergence happening? What's Blake and Steve thinking, and what's Stelio's macro on it? Am I looking at a longer term trade or a shorter term scalp? And just to have the ability to do it and see where their heads are at is worth 100 pips a month to me. So that's going to be a wrap for everyone today. Remember, don't just count your pips, count your blessings, which you can't put a dollar amount on. You can't put a pip amount on. And during these depressing times, if you could just find one thing to be grateful for, you won't be depressed. It's hard to be grateful and depressed simultaneously. Try it. All right, everyone, that's a wrap. I'll see you, Brock, Richard, all you guys. See you tomorrow for a wonderful Wednesday. Blake's haircut is a winner. You're welcome, Jorge, Ingmar. So that's it, Steve, if you want to shut it down. See you, Laura. Nice to meet you. Happy New Year. Adios, everyone.
Thank you, Dale.
All right, Steve.
Bye-bye, everyone.
See you tomorrow, buddy.
Bye-bye, mate.